Every NRI dreams of investing in India, but in US dollars or in their home currency, without worrying about India taxes or FEMA limits or endless documentation. For years, that has been the dream which felt out of reach because the only route for NRIs to invest in India was NRE accounts or NRO accounts, and even the new GIFT City options came with a very high minimum investment of around 150k USD, which was mainly built for institutions or HNIs and not for individuals like you and me. But something has recently changed. Tata Asset Management has launched a dynamic equity fund in GIFT City, and this is the first time it's mainly meant for retail investors. With minimum investment of just $500, this could be the game changer for NRIs who have been looking to invest in India, but due to some documentation issue or for some XYZ reason, they were always getting stuck and could not participate. So let's look at what makes this fund different. I am going to pull up the Tata AMC's official presentation and I'll walk you through it step by step to show how they have structured this fund, what is the eligibility that looks like, why this could be something that is a genuine turning point for NRIs who have always wanted to invest in Indian markets. So let me show you the screen. So the fund's name is Tata India Dynamic Equity Fund. And if you see, it is set up in GIFT City as a retail fund. Now we know what the main benefits of GIFT City investments are. They have very attractive tax regime. That means you don't have to pay any kind of India taxes. It is an offshore place, but only geographically located in India. But whatever investments you do, don't apply any Indian regulations. It falls under IFSC and mainly becomes an attraction. So to invest in these funds, you don't need mandatorily, you don't need bank accounts in India or PAN or those kind of things. The main nature is, if you are investing through NRE NRO account, you are subject to the 12.5% capital gain tax or other taxes on your dividend income and things like that. But if you are investing through IFSC based investments, the capital gain tax or Indian tax liability is only going to be zero. The taxes that you need to pay are of the country that you are resident of. Now, mainly GIFT City funds are distributed into three broader categories. One is for the venture capital, which is like private equity and very high ticket size. Then the one that we discussed, which is set up as an AIF in GIFT City, which had a 150k minimum USD investment. And the third one, which is the very recently launched, is the retail scheme. Now, if you see, retail scheme, like the name suggests, it is mainly meant for retail investors. It doesn't require very high investor interest to get the fund started. With the AIF, they would require at least $2 million, $3 million worth of commitment to get the fund started. But here, if only 20 investors agree, they can kickstart with the fund. It also has freedom in terms of where it can invest into unlisted securities, but mainly into IFSC. So this is going to be a retail fund, the one that Tata has launched. If you see the way Tata's fund is structured, you need to understand there are two broader ways how GIFT City funds were structured. One was a fund in itself wherein it would take money from you, manage stocks by itself. And the second was mainly like a feeder fund, which most of the people followed. So when you give investment to this fund, they will feed it into Indian based mutual funds or ETFs. They would not manage the money directly by themselves. So if you see Tata's fund, it has two parts to the portfolio. One is the core, other is the satellite. The core investment is being done into Indian market cap based mutual funds, index funds and ETF. And the satellite portfolio will also do investment into mutual funds only, but sectoral or thematic funds, which they would dynamically want to change. So they're not managing money directly by themselves. They are going to select which mutual fund the money eventually goes into. Again, the investment approach that they are going to have is they are going to take some core bets, which is based on index, but there will be some bets which will be more of sectoral based or what is going to be the new trend, and based on that they will invest some money. And the proportion in between both of them, they will keep on changing based on market conditions. Now the question is, who can invest? Definitely it is meant for NRI and foreign investors, people who are not of also Indian origin, even they can participate into this. Individuals, non-individuals. So if you are an NRI who has an LLC, corporation in US, UK or any part of the world, you can invest into these funds. Who cannot invest? Definitely because these are India bound funds Indian residents cannot invest, because if Indian resident had to invest, they would have to do it through their Indian bank accounts. NRIs from blacklisted or grey listed FATF list countries, so they are not allowed to invest into GIFT City based funds. And sadly, like every other case, US and Canada based NRI are not allowed to invest in this fund. Now it is funny where they are accepting investments in US dollars, but US residents or NRIs are not allowed to invest. But that's a debate for some time else. Now if you see, how can you make this investment? There are two ways. One is either you do a physical method or you do a digital one. Digital one is not yet mainstream. The physical one is now what they are accepting the applications, or most of our investors are also investing through the physical method. So what you need to do is take their form, sign, send a scan copy to them. Once you send the scan copy, they will open an account and give you a specific folio number. Once that folio number is generated, you can do a swift transfer into Tata's account, and then whatever your investment is there, that will get allocated. Also, one thing that you need to make sure is when you do this investment, within 30 days, your physical documents also need to reach the AMC in person. So you can send a scan copy now, but you need to ensure that within the stipulated time, it has to reach them. What if you are not able to produce the original verification documents? As you see, your investment will get rejected. And to make sure that your the document that you are sending is officially validated, it has to be signed by an authorized bank or somebody like a SEBI intermediary like us who can do the in-person verification for you. And lawyers, CPA, CA, those kind of people. What are the documents required for this investment? Typically, because these are not India-bound investments, PAN is not mandatory. Most of the common documents like your passport, your driving license, your voter ID card acts as a proof of identity and also acts as a proof of address in most of the cases. People in Gulf, they have their national address certificate, their national identity number, which will usually take care of these document requirements. So there are only two types of documents required, and just with these two mere documents, you can get started with your investment. Now, many people have certain questions on, what if I make investments now when I'm an NRI, and if I return to India, what happens then? For these kind of questions, Tata has actually given an FAQ, a detailed FAQ, which I'll quickly run you through so that you understand what are the typical questions and what are the answers to them. So if you check the screen here, the question is, first, how is it different from PMS and AIF? Definitely the minimums are less. The way it is going to get managed is different. So it is not a typical AIF or PMS that was getting managed in GIFT City. Who can invest? NRIs, foreign investors, OCIs. Who cannot invest? Residents, investors from grey listed countries, blacklisted countries, and US and Canada based NRIs. US dollar is going to be the main currency, how they accept your investments. You can either make investment directly with the company or through an advisor or distributor. What you are typically going to get charged is somewhere between 1.75% to 2.5% as an expense ratio to this investment. There's no separate fee or other fee that you need to pay apart from this. The cutoff time for this investment is very important. So let's say you want to make investment, your money, if it reaches Tata AMC before 11:30 AM IST, you will get the NAV or the investment value as of that day. But if your money reaches after 11:30 AM IST, then the NAV allocated will be of the next day. If you want to pull out your money, the turnaround time for that is 7 working days. Typically for Indian mutual fund, it is T+2, wherein when you do transaction, it takes 2 more working days from then. But for these funds, it's going to be 7 days because it's sort of a swift transfer that is going to get made in your bank accounts. Now, the biggest question, what happens if the tax status changes from non-resident to resident? Now, if your status changes, you need to update the fund management entity, which is Tata in this case, immediately. In most of the cases, they would allow you to hold the investments, but they will restrict any further new investment to that. Or in some cases, they might mandatorily ask you to make a redemption. Again, this point we have discussed what is OVD, officially validated documents. These kind of people can do this validation for you for your documents. You can make investments in USD and receive the proceeds in NRI also if ever in future you want to do that. Within 30 days, whatever documents are there, they need to reach AMC physically. Only till the time physical mode is being used. Once the digital method becomes mainstream, then you need not worry about sending the physical documents. Who bears the conversion cost and bank charges? Now see, one thing you need to realize, GIFT City investments don't actually diversify your currency risk. So let's say typically you had US dollars and you were sending money to your Indian bank account. So the conversion was happening at your end and then the money was getting invested into Indian markets. But if you are investing in US dollar in GIFT City, Yes, the conversion might not happen at your end, but it is being done by the fund management entity. So you give US dollars to Tata Gift City Fund, but then they will convert it to INR and then invest on your behalf. And then when you pull out the money, the same thing happens. The proceed comes to them first in INR, and then they convert it to USD and then send it to you. So there's no currency diversification as such wherein you stay protected from depreciation, because conversion is going to happen at some point, because the eventual market that you're investing is Indian markets. But definitely, yeah, there is some ease, and these guys usually get the best rate when conversion is happening, as opposed to you sending money to your Indian bank accounts and then facing some losses during that transaction and conversion. This fund is now in the NFO stage. So now whatever units get allocated, the price for every unit is going to be 100 USD. Typically in Indian mutual fund, it is 10 rupees. And once the fund becomes live, then the NAV will dynamically change based on that market situation. And then we have the steps how you do. I've already explained this. So these are the typical FAQs that Tata has posted. I hope this video was helpful. If you are new to this channel, I am Alok Dubey. I am a financial advisor for NRIs. My firm Primewell takes care of NRI wealth management, taxation, and any help that you might need for finance. So if you like this video, share it with other NRIs in your network who would want to invest in US dollars into Indian markets. If you need help with making this investment, please reach out to us on the link mentioned in the comment section, and I'll see you in the next video. Thank you.